Let's be specific. What is your plan for build on China's strengths?
Yeah, well, on our China strength, we're going to focus on a few things. We have already the Connect program. It started with Stock Connect. Initially, we did it with Shanghai, then with Shenzhen, then we continued expanding adding assets to it. Eventually, we did Bond Connect. So we have to continue adding things to that. It's been announced that we're going to, for example, do ETF Connect or use some of our Connect infrastructure to be able to trade ETFs. So that is already in the works. And then we have to continue adding and enhancing the program. In addition to that, what we want to be is the go-to risk management center for anything that is related to China products, okay? It may be Chinese investors willing to go globally. It may be international investors that want to hedge their exposures around China, and that may involve doing fixed income products, currencies, commodities, and many other products. And so making sure that we're the risk management center for offshore China, it's going to be very important. Of course, we always want to make sure that we're a great capital raising fund for companies, especially for China companies that want to be, showcased to the world. So this is like an important objective, being a great capital raising fund that connects China and the world. And the last thing is, as we evolve, there will be new products. And I'll just highlight some of them that are important for the future. Anything related to data, that's very important. Anything around climate initiatives, ESG, they become very relevant. So those four things are the ones that we're going to be focused on to make sure that we continue connecting China and the world.
You mentioned 4 points, including the expanding of the Connect program, providing more China-related products. What steps are already mature that we can see in the near future?
Yeah, in the near future, we're clearly going to see, I mentioned one example, ETF, and that's a great product to be transacted through our Connect infrastructure, both southbound and northbound. It has been announced, it's in the works. I mean, we're just trying to get the details right. Another example of something that is quite exciting, and it's been mentioned by several stakeholders, is the possibility of actually having shares in Hong Kong trade also in renminbi, creating a dual counter where shares can trade either in Hong Kong dollars or in renminbi. Today, they have to settle in Hong Kong dollars, which is a bit of a problem because it creates an exchange rate risk. That will create a natural pool of renminbi demand locally, and that will be very helpful in terms of helping things like promoting the growth of renminbi as an international currency.
In the past few years, more and more Chinese companies listed in the US came back to Hong Kong for secondary listing. Considering the complex of the current international relations, do you think this trend will intensify?
We expect the trend to continue. We actually have right now about 170 companies that have filed their A1 application. Now, there is a really interesting development that is occurring with companies that are coming back. Especially, you see this in the electric vehicle sector. Some companies are coming back and they say, wait, instead of just doing a secondary, I'm also going to do what's called a dual primary. So what they do is they not only make it a secondary, they comply with all the rules to be primarily listed in Hong Kong. That makes them eligible for Stock Connect. Now, when you do that, all of a sudden you have the best of all the worlds because you have all the international investors from the world, plus you have the mainland investors that can invest, and it just creates a very positive, environment for companies. So we've seen a lot more demand for that. We expect a lot more companies to try to pursue this alternative.
But the performance of these stocks in the capital market may be lower than expected after it's coming back to Hong Kong. In addition to the change of macro environment, some people blame the development of Hong Kong stock market. So do you think you should do something to optimize the market environment?
That's our second priority, which we call connecting capital with opportunities. We have to create the environment, the framework, so that the market is vibrant, it's deep, it's very liquid. And we have to enhance the operating microstructures of the market to make sure that people can trade easily. We're doing some things, like, for example, around trading during holidays, especially for the non-Hong Kong derivatives, and trying to enhance the connectivity of the market, facilitate access. And there's still more work to be done, but we've been working quite a bit to make sure that our market is really vibrant and deep.